30th September 2016 for your daily market wrap-up. Let's get started right away with your headlines. Copper lifted today along with the general market. Gold weaker on the day overall, fading below its lower value area boundary. Crude putting in a double top. And the ES, well, I just don't know what to say about the ES today. Getting started here with copper, we're looking at our traditional hourly chart here. You guys have seen this a number of times if you've been tuning in. Lifted on the general market consensus today. Here's the overnight action out of Europe, and then we just saw kind of back and forth action. We continue to trend higher in copper. As much as I like this thing short, I wouldn't want to fade it. We continue to gain acceptance higher. We continue to trade above our high, our most recent high volume areas. We may be coming back to check at 220, 221 maybe. Well, we're at 221, but 2.20 before this thing is going to lift higher. I don't really see a whole lot of downside in copper right now, though. Commitment to Trader report will be able to, we'll maybe hopefully be able to get a little more insight over the weekend. On the short side, if you are a bear, 2.16 to 2.15, that would be my target. But you're going to have to continue to put up with heat on this sucker, I think. Heading over to gold. Gold on the day, again, as I said, just faded. Again, this is an hourly chart. And in fact, let me zoom out just a touch more. We'll go to the 4-hour chart. And these are the December lows down here in this region, moving up, consolidating, moving up again. And we're just in this nice long consolidation period here at this point, fading lower, continuing to fade lower below this resistance line. Our volume point of control has now shifted lower. We talked about this earlier in the week. We've seen now a shift lower in the volume point of control, which indicates to me, right, if we continue to trade below our lower value area boundary, it indicates to me that this is going to end up trading lower. And so it might end up fulfilling kind of what we've been talking about, this lower before it goes higher. What I really like to see, just the duration of this consolidation could mean a significant move higher if in fact we get it. We're going to have to swipe out the lows down here, pick up all these stops, and trend a little lower before we get the upward action that we expect in gold. But as you can see, just off of the developing volume-weighted average price earlier in the week, and then down to the lower value area boundary, and just having a hard time finding acceptance above the new volume point of control down here at 1327. So that's gold on the day. It was not an unsurprising day considering the lift that we saw in the general market. But moving over to crude. Crude, as you can see on the day, now we're putting in a double top, almost a triple top if you want to call it, back to the earlier part of the month. Just not finding a lot of acceptance above the $48.30 mark. Certainly trading above our resistance line here. You can see we have a volume profile set up from back in August, and certainly trading above the volume weighted average price, but kind of stuck here at the upper value area boundary. This is suspect. You've got one swing high here back on the 8th of September, our most recent one from the OPEC rumors. And folks, those are still, I'm calling them rumors. We have no confirmed deal from OPEC. We have no agreed upon cuts. We have an agreement to agree, which I think in the jawboning world of OPEC ministers means about nothing. And honestly, if you look at the objectivity of that deal, they want to cap prices at a high, whatever the August production numbers were, August of 2016, which were the second highest month of output. So I don't, it's a non-deal. Anyway, I hate to be such a perma bear in this market, but I really do feel that we're going to be end up heading lower once we find out how really tenuous that agreement is. But yeah, crude on the day had a bit of a lift. The overnight sold off. This is our 4-hour chart. Let's dig in here to the hourly. You can see we kind of sold off into the overnight, and then sure enough, Deutsche lifting all markets. On rumor, by the way, on rumor. We'll get to that in a second. But yeah, so that was crude's action on the day. Still had a lift, but failed to close higher. ES, once again, the story of the day. There's 3 volume profiles on this chart, and I don't want you guys to get confused by them all. So this is the one that we drew in since the Brexit vote. You can see all this chop. The upper and lower value area boundaries in this green line here extending out is our longer term volume point of control. It's at 2153. It's an important number. This second volume profile here is from the from Fed Yellen, Chair Yellen's most recent announcement, her hawkish holding, and then this last one was today. Let's dig in even further. We're gonna go to a 5,000 volume tick chart. Today's action, we traded right back in the overnight lows. Now, Deutsche Bank opened 10% down, folks, 10% down, and got lifted off of rumors that the Department of Justice was pulling back their fine from the 14 billion to, I think it was the going number I heard was 4.3 or 5.3 billion as a fine. So if it's true, a significantly different outlook for Deutsche Bank. The thing with Deutsche Bank is they take on depositors, right? They are a vanilla bank. They're taking depositors. They have actually a large number of depositors who are all going to be clamoring for their money in what could be just a disastrous bank run if their depositors lose confidence in the bank. So anyway, today's action, right, came down off of the overnight lows, I should say, up, traded back into this volume point of control, this longer term volume point of control at 2153, and it held, and it lifted right off of that. But where did it go to? It went onto these resistance lines. We drew these a number of days ago, going back out to the hourly. Yeah, you can see here is what we had called, I believe it was on Tuesday or Wednesday of this week, we drew in these resistance lines and we said, hey, look out for these, pay attention to them. They were pressing it yesterday, and they were pressing it again today. I ended up getting lucky. I got in 2167, a nice little short off of this resistance line, and rode it all the way down into the close and getting out at 2160. So for me, it was a great little scalp at the end of the day. I'm not usually in and out that quickly. I'm usually holding a number of days, but I did not want to hold into this weekend. Who knows? This weekend, who knows? Could be nothing, right? But I didn't want to hold short in case the DOJ came out and confirmed these suspicious rumors. And then we have a massive gap up come Sunday night. So in any event, I caught a little action here at the end of the day, gotten lucky. But this just doesn't look healthy, especially from a technical perspective. If we look at this, this tells me we're heading down further. And if you look at just the volatility that we've seen since Chair Yellen's announcement, and now this, well, I'm not going to say that word, but this kind of debacle here that we've had with, first it was the first debate, and then now Deutsche, and up and down, up. So quite a lot of volatility, and some of these market moves, just to kind of put a fine point on, I want to kind of zoom in into even, this was the close, guys. This was the close. we dumped into the close for literally the past like half hour. You know, we checked back up here at 2167, 15 minutes before the close, and it sold right back off into VWAP. So, like I said, I wrote it down to 2160 and, felt good about that trade. So anyway, that's what we got for you today, folks. Here's your daily market wrap up, the 30th of September, 2016. I hope you had a good week. I hope you have a kick-ass weekend, and we're going to check you later on in the weekend for a weekly review. So we're going to call it. That's it. If you like it. As always, it's your money, it's your account, and we'll see you back here for another great daily market wrap-up next week. Take care, traders.